Hey everyone, today let's talk about something that millions of us use every single day, UPI. It has totally changed how we handle money, but you know what? It's also creating this massive digital trail that has some really surprising and frankly, hidden tax implications. Let's get right into it. So let me just ask you this straight up. Could your daily UPI habits actually be putting you at risk with a tax man? I mean, think about it. From that chai you bought this morning to splitting a dinner bill with friends, every single tap creates a digital record. The real question is, are you accidentally creating a tax problem for yourself without even knowing it? The thing about UPI is, it's just so easy, right? We're making hundreds, maybe even thousands of tiny transactions. And the result? Well, what used to be a simple two-page bank statement can now easily stretch into a 100-page novel of your financial life. And the most critical part to remember is, the tax authorities can read every single line of that story. And look, this isn't just some theoretical what-if scenario. This is real. There was a case where a street vendor in Karnataka got a tax notice because 40 lakh rupees had been deposited into their account all through UPI. That's proof right there that the tax department isn't just watching, they're actively monitoring these transactions. So, this is really the heart of the issue. That amazing convenience that we all love comes with a brand new level of scrutiny. Let's break down exactly what the tax authorities are looking for when they're scanning all this data. Here's how it all works. Both the Income Tax Department and the GST Department have the technology to track this massive flow of digital money. What they're doing is comparing the total amount of cash flowing into your bank accounts via UPI with the income that you actually declare on your tax returns. If there's a big mismatch, well, that's a red flag. This is the million-dollar question, isn't it? What's the magic number? Where is that line between just normal, everyday use and the kind of activity that triggers an alert and gets you an unwelcome notice from the tax department? So let's get down to brass tacks. We're going to walk through the actual numbers, the key limits you really need to know to stay on the right side of the law and avoid any of those nasty surprises. Okay, first up, let's talk income tax. If the total amount of money credited to all your bank accounts for the whole financial year is up to 4 lakh rupees, you're generally not required to file an income tax return, or ITR. Think of this as your basic exemption limit. Now, let's switch gears to GST. If you're a service provider, a freelancer, a consultant, a professional, the big number for you is 20 lakh rupees. Once your annual turnover crosses that line, you are legally required to register for GST. But what if you deal in goods? Maybe you're a trader, a manufacturer, or you run a retail shop. You get a little more leeway. For you, the GST turnover limit is higher. It's 40 lakh rupees in a year. Cross that, and GST registration becomes mandatory for you too. All right, think of this table as your handy little cheat sheet. Up to 4 lakhs, no need to file an ITR. Now, between 4 and 12 lakhs, you do have to file an ITR, but because of government rebates, you probably won't actually owe any tax. Then for business, just burn these numbers into your memory. 20 lakhs for services and 40 lakhs for goods. These are the absolute key figures to keep in mind. This brings up a super common situation. What about all the other money moving around? When your friend pays you back for lunch or your parents send you some cash for your birthday, is that counted as income? Well, the good news is, no, not every single rupee that hits your account through UPI is taxable. Let's take a look at the really important exceptions that you need to be aware of. So what's exempt from tax? Generally, loans, whether you're giving them or receiving them, are not considered income. Gifts from specific relatives are also totally tax-free, as are gifts you receive for your marriage. And then you've got gifts from friends, which are tax-free. But, and this is a big but, they come with a surprisingly small limit. And the difference here is just wild. Money you get from close family, we're talking parents, your spouse, your siblings, has absolutely no tax limit. But for gifts from anyone else, like your friends, the total amount you can receive tax-free in an entire year is just 500 rupees. Seriously, if you go 1 rupee over that, the whole amount becomes taxable. So the bottom line is this. If a large sum of money suddenly appears in your account, you have to be able to prove what it is. If it's a loan, have a loan confirmation. If it's a gift, have a gift deed. Without this paper trail, the tax department can just assume it's undeclared income and they will tax you on it. Okay, now that we get the risks and the rules, how do we actually manage our UPI activity so we don't get into trouble? Let's get into some practical, super actionable tips you can start using today.
Here are 3 simple habits that will make your life so much easier. First, think about opening a separate savings account just for your small daily UPI expenses. Transfer a set amount in and just spend from there. Second, always use the notes or narration field to describe what the transaction is for. And third, for any loan, big or small, make sure you have the KYC documents of the other person.
This brings us to the golden rule of managing your money. Keep your personal and business finances separate. It's so simple. Use a savings account for all your personal UPIs and use a current account for all your business income and expenses. Mixing them up is just a recipe for confusion and potential tax nightmares. And for anyone out there running a business, please remember this vital point. You are not taxed on your total UPI turnover. You are taxed on your net profit. That's your total sales minus your legitimate business expenses. Your turnover might be a big, scary number, but it's the profit that actually matters to the taxman. So let's end on this thought. Every single UPI transaction you make is a permanent part of your digital financial history. It's telling a story. So the key question you should ask yourself is this: what story is your UPI activity telling the world? And more importantly, what story is it telling the tax department?